Hi guys, welcome to another video. This time we're going to be talking about the RSI, the Relative Strength Index, to help you trading stocks, Forex, indexes, anything that you might be trading. We will use eToro as the example, but this should be useful regardless of what platform you use for trading. Right, the first thing I'd like to do is to invite you to visit my profile here on eToro, Johnny Rico. Follow me here on eToro. If you enjoyed this video, click thumbs up and subscribe to my YouTube channel. Alright, let's get started with a little bit of theoretical information. So the Relative Strength Index, it's an oscillator, and we have an upper and a lower band, which will mean that we are either in an overbought situation or an oversold situation. That line varies between 0 and 100, and we will have an upper band and a lower band. The upper band can be at 80 or 70, and the lower band can be at 20 or 30. All right, let's get to it. So you can go to the web trader, click over there, and you will get a graph open. I have my one already open. Let me just close this thing so that I can show you how to get it. So you go over to studies, you click on RSI, and then the default on eToro is 80-20. I suggest that you change this to 70-30. Just my personal preference. I also changed the color here to red so that I can see it better, and then click create. And there we go, we got the RSI over there. You can make it a little bit bigger to see it better. Okay. So, and then we have the two bands, the 30 and 70. If it's above that line, it's overbought. If it's below that line, it's oversold. Let's talk a little bit about strategies. I will mention three strategies. There's more than those three. There's more possibilities for the use of RSI. But I'll just mention three, and I'll use mostly strategy number 1 and number 2. So strategy number 1 is overbought versus oversold. So if it's below the lower line, if it's below here, we buy. If it's above, like over there, we sell. All right? So nice and easy, we can sell over there, we can buy over here. We can also buy over here. All right. Divergence. Divergence means the price is going up and the RSI is going down, or the price is going down and the RSI is going up. So any time that the two things are telling us different things, it's a divergence. All right. So if the RSI is telling us something different from the price, many times, not always, many times it could mean that the price will reverse, will go the other way. Okay. Strategy number 3 is every time that you will go above the 50 level. You can see that at the moment we're close to it. If we go above it, we can buy. If we go below it, we can sell. This will give you lots of signals, lots of buy and sell signals. So I'm not going to focus on that strategy for this video. All right, let's get to a few examples. The first one is with the GBP USD. So this is a nice example for strategy number 1, overbought versus oversold. So we can see over there that the market was overbought. We could sell there, and the market went quite dramatically down, right? So we would make a nice profit over there. Okay, notice that sometimes you will have a signal that is not respected, it's not just looking at overbought and oversold and make a decision. You will need more information than the RSI. Over here, for example, it's clearly oversold, but the market kept coming down, right? Even though it did rally a little bit over there, right? It did in fact go up a tiny little bit over there, but for the most part it kept going down. So keep in mind that you need more information than the RSI alone. Let's go to the next example, the Euro Yen. This is a divergence example, actually. What I want to mention here is that over there, the price was going up, right? We have two highs. The second high level is higher than the first one, but the RSI did the opposite. It went down. So it's telling us that it's losing strength, and it's possible that it will revert and go down. which is what happened afterwards, right? So if we see this thing, we could possibly sell. We would be selling somewhere over there, and the market went down, and we would make a nice profit. Over here, recent weeks or recent months, the market is going up. So the market is going up. Now, actually, what I want to mention here is the market over here was at this level, and it went down to this level, right? And the RSI is telling us a different story. It's going up, right? So it's an indication that the market might be rallying at the moment, which it started to do. Whether or not it will sustain this move, this upwards move, we will see. But if we actually look at what was happening there at that level, and then the second level, the market went down, right? So the market went from that point there to this point here, and the RSI went up. So it's a divergence. It's telling us that it's going to go up. But again, we need more confirmation. Another example. Okay, this example here, we see that the market was overbought for quite a while there. A lot of spots there in which it's overbought. So we could have sell somewhere over here and follow a long-term downtrend. Also notice that we have a divergence, which is even stronger. I believe more in divergences than simple overbought, oversold stuff. So we can see that the market is going up continuously over there. The highs are high. Each high is higher than the previous one, right? But over here, we're seeing a different story, right? We're seeing the RSI starting to come down. It's coming down. Even though the price is going over there, this thing is coming down, right? So we could sell and follow the trend. Okay, let me just have a quick look here to see if I had any information here. Not really. Over here we just have a little bit of a spike here, which could mean that we can buy. So it's an oversold, clearly oversold situation which we can buy, and the market actually rallied after that. And here we have the same thing, right? So we have a big spike there, and the market rallied after that. Okay, next example. This example is with the oil. We see that the market was overbought over there and started a nice downtrend in which you could have made a good profit. The other thing I'd like to mention here is that the lower levels of the RSI are lower and lower as the downtrend progresses, right? So it's confirming what we are seeing, even though over here it's easy to read. In this entire area here, it's easy to read, right? Because the price is going down and the RSI is agreeing with the price is going down as well. But over there, it was already telling us that it could go down. Can you see lower lows? So back here, while the market was going sideways, we were getting lower lows. So we have a low there, a lower one there, and then a lower one there, right? So it's telling us that we can sell around here, or maybe even over there, sell. A huge downtrend that we could have followed there. Right, I have one more example, S&P 500. Very interesting. Lately, it's going up. A bit choppy. It's going up and down a lot, but it's going up. So we have higher highs, but the RSI is telling us a different story. The RSI is telling us that it's going to go down. So if we are to trust the RSI, we should be selling at this point. But again, we need more information. RSI alone is not, at least for me, it's not enough for me to make a decision. All right, that's pretty much all I wanted to share with you for this video. Again, I'd like to invite you to follow me on eToro. Click thumbs up for the video and subscribe to my YouTube channel. Feel free to leave comments or questions over here on my profile. Keep well. I'll see you in the next video.